Welcome to the Delaware Mortgage Rate Weekly Mortgage Market Update for the week of March 11, 2013. Hello, I'm John Thomas with Primary Residential Mortgage here to give you your update. Well, last week was certainly not a good week for mortgage rates. Mortgage rates rose higher all week and then sharply higher Thursday and Friday. If you look at the bond chart and scene, you can see that for the last 5 days, mortgage bonds actually sold off and resumed that downward trend, as you can see from the arrow. Last week we actually tried to test, or actually Monday of this week, we tested the 200-day moving average, was turned sharply lower, which I said if that happened, switch to a locking stance, and then we just kept going lower and lower. And what drove the mortgage bonds lower and mortgage rates higher was the economic news. Last week, the first thing we saw that started the trend down was ADP reported on their payrolls that job creation was up, hinting that the jobs report on Friday might be much better than expected. Thursday, we saw the weekly initial jobless claims come in lower. Actually, the lowest it's been in a long time at 340,000 weekly initial jobless claims. So that shows less people are filing for benefits, which means they must be going back to work. And then Friday was the big February jobs report, which blew away expectations. We were expecting 165,000 jobs to be created. We actually created 236,000. So it blew the report away. Stock market rallied, set an all-time new record high for the Dow, and mortgage bonds just sold off big time. So mortgage rates moved higher through the whole week and then jumped higher on Friday. Now, we are going to recommend floating your Delaware mortgage rate to start the week, very cautiously floating, because when you sell off for 5 straight days, you look for a correction. So we're looking for some people to come in and buy at bargain prices and hopefully boost the bond up, move interest rates lower. If the downward trend continues on Monday, we're going to quickly switch to a locking stance, because that means the damage could keep getting worse and mortgage rates in the short term could move even higher. So let's look at that jobs report that came out on Friday. What was it? Well, we talked about the numbers, 236,000 jobs versus 165. That really set the market going. And unemployment actually dropped from 7.9 down to 7.7%. So all that looked like great news. Unemployment's dropping, jobs being created. But if you actually dig into the jobs report, some of the news wasn't all that great, because January numbers said we created 156,000 jobs in the January jobs report, but in February we revised it and said we only created 119,000, so less on the January. And then unemployment coming down to 7.7 looks like that's good, but it actually wasn't really good, because the reason why we dropped the unemployment number from 7.9 to 7.7 was less people looking for work. So not more people back to work, less people looking for work. And we can see that by looking at the labor participation force rate. That shows that it's actually hit another low. It hasn't been this low at 63.5% since September 1981. So that is a study of how many people are eligible to go back to work, or eligible to work, that are compared to actually working. So that gives us a true picture of what's going on, and that's showing we just don't have the people back to work yet. In housing, though, some good news in housing. CoreLogic came out and said price increase from December to January, home price increase by 0.7%. And then year over year in January, we had a price increase of 10%. So that is awesome. And then we also saw in Europe that another nation needs a bailout, the tiny nation of Cyprus, which their banks heavily invested in Greek debt, which defaulted. So now their banks are in need of a bailout to the tune of $22 billion. How the European Union bails them out is going to have consequences, because other countries like Portugal and Ireland, if they see those terms much more favorable than what they got, they're going to want to renegotiate their terms with the European Union. So we want to keep a lookout for that, because remember, bad news in Europe can spill over here, and that can help bonds recover, move home loan rates lower. In the local news, the next free first-time homebuyer seminar is this Saturday, March 16th. That's in Newark at the Christiana Hilton Hotel, and that is from 10 a.m. to noon. The next one in Dover is Tuesday, March 19th, and that is at the Dover Sheraton on Route 13. That's from 6:30 p.m. to 8:30 p.m. You can register for either one of those seminars by giving us a call in the office at 302-703-0727, or you can register online, www.delawarehomebuyerseminars.com. Look forward to seeing you guys next week.